Hey, good morning. How was your weekend? Oh, look at that. Got a tan, lost some weight, bought some nice clothes, got a haircut. Very good. Not me. That sounds really nice. I'm glad you had a nice weekend. I had a nice weekend too. Yeah, thankful for all the pips. Oh, yeah. Never can get complacent. Well, hey, it's Monday. It's time to go through and create our strategy for the week. We got to do our commitment of traders report to look at the large speculative positions in the market. We also need to go through the calendar and look at the event risks, so on and so forth. Hey, I think it's going to be a good week. Let's get going, yo. You want some happy music? Yeah, let's start with some happy music. Happy fun times. Yep, so that's where we are, Forex.Today. Thank you for attending our live event. Let me remind you that trading Forex is risky, not appropriate for everyone. You can lose the money that you put in your account. Can happen. Therefore, stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Any link to find the skill professional charts? Not sure what you're looking for. Please ask again. Hey, by the way, my name is Wayne. I'm the Chief FX Market Strategist for TradersWay, an ECN that gives Forex traders the entire toolbox that they need to succeed. One of the things that they're doing, of course, is investing into your future success today, trying to earn your loyalty so that when you feel like you have the skills and the discipline to carry them out, to find success in the market, that you'll use TradersWay as your prime brokerage for your successful trading business for many, many profitable years to come. I think that's a brilliant business plan, isn't it? Invest into you first, and then we'll partner up later. That's cool, huh? Oh, Sugi's asks if the yuan goes into the IMF basket, how will it take? What kind of benefit will it won't? First of all, it won't do anything. So, I suppose we'll talk about that. I guess we'll talk about it now. Yes, so the IMF and the SDR and the yuan and all that kind of stuff, it won't mean anything. If you want the short answer, the long answer is it's not that important. Not a lot of money is affected by it. Even if it was important, it doesn't take place for a year. It doesn't actually happen for a year. So it's just an interesting process in the maturity of the currency. So for example, people say, well, hey, yuan is the currency of the second largest economy in the world. One day it'll be a major currency, and maybe it'll be a reserve currency like the U.S. dollar, maybe even replace the U.S. dollar. No, that's silly to even think about it. But for example, you need a free open market, right? We're a long ways from that. You need a fair, stable, and trustworthy legal system. Well, we're a long ways from that. You need a deep, mature, liquid bond market. We're a long ways from that. I mean, we could be 50 to 100 years from even considering such a thing if you actually take out the emotion of it. So SDR, IMF, yuan, all these different things. Just a small step for in the maturity of the currencies. All really. Like, oh, I see. No idea. Okay. So, all right, so good questions right off the bat. Boom. Cool. Do you want to just jump right into it, or do you want to take a look at a chart? We can do a chart first, huh? Do technical analysis first. Everybody likes technicals. This is the Euro USD. I don't know if you've ever seen it before. It's called the Euro USD. Cool, huh? Accounts for what, 30 or 40% of all currency trading. Wow. But this is where we left it off. When was this? 2 weeks ago? Remember, this is that pullback where we discussed whether I should get out or not, and I stayed short, and then dropped, and I got out down here. But notice all the smaller waves. This isn't an hourly chart. If you go out on the bigger chart, you can see this is a wave. It doesn't, and I don't necessarily mean Elliott wave, but Fibonacci retracement maybe is a different way of saying it. So there's the big, the macro retracement, and then you can look at it from this point of view. Then it dropped in here. You can consider that a retracement because that's basically 618. Then you drop to the hourly. Okay, so here's this move, but look at all these retracements: breakthrough, support, back, retest. Okay, back to the scene of the crime. That's an obvious sell. Down, pullback, right? Down, little micro pullbacks. Imagine this move down here on like a 15-minute chart, not an hourly chart. That you're really zoomed in. And look, these are the retracements you're looking to sell, right? Down, right? So in this point is when we were talking about whether I should freak out and take my profit or let it run and continue for another move down. And I talked about how it never even really made a 618 retracement yet. So even though it pulled back 130 pips, there was no reason for me to give up. I still had almost 300 pips profit, right? So anyway, so it made its 618 retracement back to the roll reversal. And if I zoomed farther out, this gray area was already marked as support. So this support would now be resistance. That worked out, made a little drop. Okay. So if I zoom in, let's do it on a 50 chart now, if I can find this. Okay, we break through this support, and you can see I have this idea that it will come back to support, and that support will be resistance. Well, it didn't quite work, but what it did is it made this new low. So how do you trade the low? You take the Fibonacci retracement, right? And it's basically a new 618 in here. Okay, so what you're planning is the retracement up. Okay, what does the 618 Fibonacci retracement predict as far as an extension is concerned? What's just the standard Fibonacci theory? A 618 predicts a 1382, exactly our time. Okay, and that 1382 ails right here. What? Say it ain't so. Look at. That's the 132. Oh, snap. I love it. Don't you just love trading? How this stuff. Sometimes it's a coincidence, there's no doubt. But sometimes it's just spot on. But, the news to use here is just look at over and over and over the retracements. Okay? You see this low? Okay? This low is lower. WWWD. What would Wayne do? What do I teach you? You would do a Fibonacci study of that move, right? And where would the sell zone be as a bear? Where's the sell zone? Fib, right? Joseph Hammock, yep. So I'll move this around, and what we're measuring now is this. Check that out. 50 retracement. Doesn't get any base. I mean, that's as basic as it gets, isn't it? That's a very obvious sell zone. Now, the actual answer to the question, where do you sell after it's made that new lower low? How do you handle a fib or a hammock from previous webinars I've called it a hammock for a long story, but somewhere between the 382 and 618 Fibonacci retracement, it, if you're a bear and you believe the market's trending, which to me it seems like it's trending, where's your next sell when you're down here? Somewhere between the 382 and 618 Fibonacci retracement. Came back exactly 50%, boom. Didn't wait that long, did it? Okay. So is this low now lower than the previous low? Yeah. So now what do? We do the same thing again. Now keep in mind that this could be a 5-minute chart, a 15-minute chart, even a 1 hour, right? Could work out about the same. Okay. Okay. Where's the sell zone? Somewhere between the 382 and 618 Fibonacci retracement. And oh snap. Another one. Now what can blow your mind is you go to the 5-minute chart and you may have opportunities, or even 1-minute chart, to play similar patterns. I'm trying to zoom into here. It's just, it ain't gonna let me. But you can see, I got too much data on the chart. There we go. 1-minute chart. You can see on this 1-minute chart, can you see the same pattern? Doesn't it seem like I'm looking at an hourly chart, right? Lower low, lower high, right? Lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. And then what? You get, dare I call it a macro? What is it? A 3-minute retracement? But you can play that out as well. It's a 1-minute chart. You can have these little micro ones, little nano, nano moves. But then here's just the standard, right? Low, retracement, new lower low, so on and so forth. So whatever you are, a scalper, which might use a 1-minute or a 5-minute chart, a spot trader that might use a 15-minute chart, and a swing trader that may use like a 4-hour chart, it's the same pattern, isn't it? Lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. Okay. Yeah, James says time analysis is the hurdle. That's probably a half a day to wait. Yet in many cases, in some cases, on a higher time frame, you could wait a week and a half to 2 weeks. There have been times when I've been building portfolios, I had to wait like 7 months. Right? Now, James has several waves to get through. Well, see, I don't like calling it wave. I know I do, and then I try to correct myself because a lot of people will think, well, I'm wave counting like Elliott Wave, and I don't mean it like that. I just mean like retracements and extensions. Because the Elliott Wave will do things like, this wave has to be bigger than that wave, and then this is going to be 3-wave correction of this move. And I hate counting. I'm an entrepreneur. I hate rules. Doesn't have to do anything, in my humble opinion. Because one thing, and I don't know enough about Elliott Wave to criticize it, so I don't like criticizing it. But when I have met with wave technicians, a lot of times they'll say things like, "Oh, well, I didn't count it right, so I have to recount it." Like, recount it. You lost money. It's over, dude. You're like, But I have I educated somebody for maybe 2 years as a trader, and he learned my style of trading first, and then he went through and tried to get certified as an Elliott Wave technician, and he was super, super, super advanced, right, to get the last test, and I think he had to like pass with the 80% on the final test, and he was only getting 75, and he had to do it a couple of times, but he was quite advanced, and he explained to me, he's like, first of all, what I do and what Elliott Wave does is very, very similar in many, almost all situations, but that he sees Elliott Wave more as as analysis, like a way to study what has happened, but not necessarily a trading strategy. It's more of a methodology for analysis, if that makes sense. So he says it helps him understand what might be happening, but it doesn't put him in a trade. That's how he explained it to me. And that from once you get a general strategy, then you got to enter it tactically, and then he used everything that I taught him. Right? So it comes out very, very similar in almost every situation. So okay. All right, so let's go. Go, go, go. Hey, this is Forex.Today. Good to see. Oh, people in the chat room. Hello. Make sure you register so you can chat in the public chat room. All right, what are we going to do? First of all, have you guys gone through today's trading ideas? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. On the homepage, there's at least 11 trading ideas for today. You see that, guys? Has anyone gone through all 11 just for today? I think that's pretty remarkable. Now, let me show you a trick. The website's designed with tablets in mind. Did you ever notice that there's a next button? You can go right to the next trade. So you could read this one and say, okay, yeah, I see what Kate says. Great. Next, go to the Aussie yen trade. Oh, there's YJ's trade. Yep. Higher high, higher low, Fibonacci retracement, going to come in here. Stop. Look at that. Oh no, I'm like, that's funny. That's probably where I'd enter. Dope! So, yeah, so this is where you could even leave a comment, right? Oh, beautiful charts, YJ. So you could even leave a comment. Hey, you know, are you concerned about this? Blah, 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 blah. Give them some feedback. Swipe, right? Right swipe to the next. Okay. You see, that's just a tip on how to use the website a little better. All right, so anyways, today we need to do the commitment of traders report. Okay. So we got to go to the news first. Calendar and COT report. Let's do the calendar. Okay, there's so much going on. I think there's multiple pages, right? Yeah, look at that. Yeah, only 3 pages of news this week. That's it. Only 3 pages. I might have to filter this, huh? Let's just do threesies. Kenny's like, yeah, red only. All right. German. I can't even say it without laughing. German inflation report. Hang on. Let me sip my coffee. German inflation. They should just skip it and say, you know what? We're not even going to report it for a year. Right? They're like, we're just going to cancel it, all CPI reports till next year. Of course, DAX is strong. Remember, I told you the day that they finally announced rate of easing, I told you you should corner the market on German stocks, right? Yeah, thank you, Mario. And you have, sweet. So I guess this is a good time to talk about it now. So we have an ECB meeting later in the week. Blah, 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 blah. ECB press conference, right? Okay. And the interest rate decision. Okay, obviously they're not going to raise interest rates, but there's a couple of things several things actually that Mario is probably going to do. Cut the deposit rate further, maybe. Okay. Wayne, do you have any expectations for ECB? Okay, I'm doing that, Mark. Cool, right? All right. Possible interest rate cut further. Bingo. Is that tightening or easing as a monetary policy? It's silly I even ask such a question, right? All right. Yeah, it's easy. Yes, Rana Pana. Rana Pana Pana. Yes, Rana. And then another thing that will probably happen is that they will extend how far that they've said they will do quantitative easing. Remember how they said to the end of 2017 or end of 2016? Then I think that it's really going to go to like 2017, right? So at some point they'll say they are doing quantitative easing, and they will continue to do it for a longer period of time than previous, right? And then there's a pretty reasonable possibility that they increase the amount that they do per month. Print more euros, baby. Right? All of which should bring the value of the euro down, which creates inflation. It also increases asset prices, right? This is why the German stock market's up. So there's multiple reasons why this happens. And, one reason is that I've always called quantitative easing a free money rally. So if you were with me during QE1 or QE2 or QE3, now some of them were more effective than others because of the size of the quantitative easing and stuff, but I've always called them free money rallies. And when you print money, the purpose of printing the money is to increase asset prices. And what that means in English is the stock market's going to go up. That's why they do it. Just isn't that awesome? I mean, that's why they do it. Because increasing housing prices is a much more difficult thing to do just printing money. Lowering interest rates is supposed to stabilize that, but also, free money. If you just give the market money, the market likes it, right? Think about when you purchase a stock, right? You're purchasing a portion of future cash flows called dividends. If it was a bond, it'd be like coupon payments, right? You're supposed to collect dividends, and you're owning this company, and the company should increase in value, or at least the stock should increase in value as investors come in because they believe the company is going to make more money in the future. If they didn't think that, then no one would buy your stock, and if no one was buying the stock, there'd be no demand, and the price wouldn't change. So you need more investors to say, wow, I want that company. Well, here's the interesting thing. When you just add money into the economy, just add it, that's got to go somewhere. It's going to go to these companies, right? So also with interest rates like zero or even negative, where are you going to put your money? The bond market, right? No, you got to put it somewhere where you receive some sort of return on investment. So the only game in town is the stock market, and that's all by design. Remember when the bond market was fantastic in Europe? What was that, 3 years ago? I can't remember. It might have been 4 years ago. Honestly, I can't remember. The timing of everything, it's weird when you sit in front of your charts, you just lose time. But you used to be able to catch, 10 or 15% on a European bond. Well, that bubble burst. Now you get negative. or 1%, right? Nice. So now you got to put your money in the stock market, right? Where was the stock market when Italian bonds were like 12%? And I'm not talking a 30-year bond. I'm talking a 30-minute bond, right? Where the stock market was in the toilet. Pardon my French, right? In the latrine. So all of a sudden the bond market interest rates went down, stock market's up. Okay. So that anyways that's the whole design of data visa. Also, what happens with inflation? What happens to the purchasing power of your domestic currency when you have high levels of inflation? Well, what is inflation? Prices go up. So, right? So if let's say your dollar buys less than it used to, you need more dollars to buy something, right? So down in value. So prices are either going up or the purchasing power of your currency is going down. Sometimes it's really confusing which one's happening, right? So if you were earning dividends, for example, from a stock, and your dividends are fixed, you're going to earn 5 cents per share, every time a dividend payment's to be made. You can just say, well, I have 1,000 shares, I'm going to earn 1,000 nickels. Fine, you know what that's happening, but over the course of time, maybe that payment is worth less and less to you, so therefore that stock becomes less and less attractive to own. So what do? Probably sell the stock. So inflation could be bad for the stock market, right? But right now there's no inflation and it's good for the stock market, especially when you're printing money. But there might be a time, 10 years from now, when they get the inflation they want, and you know what's going to happen? They're going to complain about it. I've been doing this long enough where I've seen Japan cry about how strong the currency is, and then I've seen Japan cry about how weak the currency is, and then I've seen them cry about how strong it is, and now they're going to start crying once again about how weak it is. And it's just funny. I mean, it's just how it goes, right? It's very difficult to find an equilibrium point between supply and demand, right? So anyways, we'll reboot here. Let's go all the way back to the beginning of the week. So no inflation, therefore more quantitative easing. Therefore, stock market goes up based on expected future improvement in expected future cash flows from the free money being entered into the market in Europe. Okay, so stock markets skyrockets. Is there inflation? No. One day there will be reasonable inflation. Well, that won't hurt, but then you got to use real rates and start subtracting that inflation. And then one day, maybe, and it could be 10 years, it could be never, but one day there might be too much inflation, and that would actually be a bad thing for the stock market, and it would all come down. Okay? So we're just in the very beginning of a very long-term cycle here. All right. And if you look at the DAX, there was a beautiful Fibonacci retracement. I don't know if you guys caught it or not, but you had your opportunity if you're watching it. All right. So how about some Chinese manufacturing data? Do you think that's going to be important on December 1st? Yeah, but we're still not getting good data, right? So here's the thing to look for, just an FYI. Anything below 50 means the economy is actually getting smaller and smaller and smaller and smaller. Okay? Anything above 50 means getting bigger and bigger and bigger and bigger. So 50 is the important thing. And for China to admit they're contracting is a pretty big thing because, I've watched this, get closer and closer and closer and closer and closer and closer to 50. And I was always amazed that, China could come out, very, month over month, be able to crunch all the data from this huge, massive, complex economy and figure out it's 50.1. Not 50, not 49, Brian. And we did that for, I don't know, a year and a half, 2 years. I don't know. It was just like, wow, that's amazing, because 50 would be very negative, but 50.1, still expanding, right? Well, now we've gotten past that because everyone, couldn't stop laughing at how absurd those numbers would have been realistically, right? So, 49.8, 48.3. All right, well, the thing is, if it's reported 49.9, all we care about is the economy is not growing. What do you think it should be? By the way, if you ever need to know what these news are, you just click it. If China is growing at 12%, it's going to be a lot more than 50. You know what I'm talking about? Yeah, so Kenny's like, yeah, it's probably 30 or 20, but who knows? And I don't get caught up in all that nonsense, like whether it's true or not. It doesn't matter to me. We know the economy is contracting, and that's fine. And I even know why. So, like, whatever. Is it growing? Is it being, I think if this was growing from 49, if it was 48 and now it's 49 and then we get it to 50, right? So you notice that the forecast is 49.9, but not 50? Fine, whatever. But once it's clearly over 50 and stabilized over 50, I can start moving, or I can start adjusting my fundamental models. Okay? That's all I care. Is it contracting? Yes or no? So I don't expect it to expand until we get Europe on board. And, we're going to find out today, we still need emergency measures. We need to add to emergency measures to save Europe. All right? We got to save Euro Disney from foreclosure, right? All right. RBA interest rate decision, obviously going to be a good one. Are they going to raise interest rates? No. Are they going to lower interest rates? Probably not. But the statement could have a lot of valuable information. Okay? So, if you were going to front run, you should probably get yourself in a long position with a stop at break even. But you'll get your charts, you should have did that, earlier today, right? It's already starting to move. Because not down is up. Do you understand that? Every time, when we hit 70 and then it dropped down to 69 on the Aussie USD, do you remember talking about that that's a level, and that without the RBA talking it down, it's some weird convoluted way that means up? Because it's a floor. And so to get it to go farther than 7, it's really 70. We dipped down to 69 one day, right? But if the floor is 70-ish, we need the RBA to tell us it's worth a lot less than 70. What's happened over the last couple of years, maybe we've gotten used to it, but Governor Stevens at the RBA would come out and say, it's not worth 70, it's worth 60. Boom, there you go. Well, it's been several months and we haven't been told that, have we? Have we? And I've asked you to read the meeting minutes and stuff like that, right? And are they saying it's still overbought on historic or overvalued on historical terms and stuff? No, they're kind of starting to remove that language, right? This is why I've asked you to do this homework, so that you're smart money, right? So, based on your analysis now, what are they going to do at this meeting? What's likely to happen? So if you don't think they're going to say it's worth 60, well, then you need to buy low at support. And that's why we have charts now. So the fundamentals, that's your strategy. You say, well, unless I 60 out of Stevens, then, down is less. It's not really going up that much either, right? But that's the perfect carry trade, where the thing does nothing except stay profitable and pay you 200% a year in interest rate payments. Because you can sleep at night knowing that it's not going to skyrocket, so now you're going to panic because you want to take profit on your pips, but it ain't crashing either. You got your stop at break even, so what do you care, right? Imagine you sat on this 300 pips over the course of 6 months. You wouldn't even really care. You'd just get so used to waking up, all right, well, it's only up 220 pips now, and 2 weeks later, oh, now it's back up to 300. And you just kind of look at it. It's like watching grass grow, except over the course of 6 months, you get your initial investment back in interest payments. So now after 6 months, it's a free trade, right? Now that's cool, right? That's the perfect carry trade. $1,000 in, $1,000 out, trade still open, nice. So anyways, this is going to be important. You should see this on the calendar, and you should, if you want to front run that, again, find support, plan it, prepare for it, get a trade in, move the stop to break even, 24 to 36 to 48 to 72 hours in advance. Just sit on it. Stop at break even. Maybe it hits, maybe it doesn't. Who cares, right? Now imagine you had, what if you had 6 or 7 trades like that? Maybe it hits, maybe it doesn't. You don't really care. Right? It starts to add up over time if it hits. And if it doesn't hit, it didn't cost you anything. Okay? Is it possible that Governor Stevens and the RBA say something quite positive? It's possible. And if the market interprets that as good, whatever that means, you could pick up 100 pips. It hasn't happened in a long time, but Aussie jobs report used to be one of my favorite reports. One of my funny memories. I was staying at the Waldorf Astoria Towers in New York for some sort of trip, and my hangout in New York City is usually the Bull and Bear, which is where J.P. Morgan used to hang out, and the Barons of Wall Street still go there. It's a type of place where it's a very, very, very old bar, beautiful wood everywhere. Yet they have a ticker tape. So you can see me hanging out there, right? So anyway, I'm hanging out there. I'm eating a steak dinner, having a glass of wine, and then I'm like, oh, look at the time. I said, I have to go. Let me settle my bill. I'm going to go away for half an hour, and then I'm going to come back. And he says, well, where are you going? I'm like, oh, I just got to go upstairs to my hotel room. The Australian jobs report's coming out, and it's going to be good. So I'm going to go up there. I'm going to make money, and then I'll come back down, and I'll have another nightcap. So I go upstairs. The report's good. I pay for the whole day in that half an hour worth of work. And I come back down to the bar, and they're, how did it go? I'm like, it was awesome. High fives around. I just love it. It used to be my favorite thing. RBA, now it's RBA meeting minutes, I suppose. But Aussie Jobs Report was another favorite. Yeah, but you got to get into trading like that, where you start, some of these news events have almost personalities to them. Now, what happens after a good jobs report or a good interest rate decision or a good RBA meeting minute? What happens specifically to the Aussie when there's a good news, good report? whatever, good something. The Aussie dollar skyrockets, jumps 150 pips. What does the Aussie do, specifically the Aussie? 100% retracement. You watch it. Go back. Do some back testing, historical analysis. Watch the Aussie. That stupid thing, I don't know what it is about it. It'll jump 150 pips. 24 hours later, be all the way back down, wipe the whole thing out. 24 hours after that, it'll be back up. It might be like Japanese banks or something. I don't know what it is, but it's just the personality of that one currency. It's just very interesting. All right, by manufacturing out of the UK. Look at this, guys. 55.5. China, 48, right? Or sorry, 49.8. Wow. So huge difference. Amazing. So that could be a market mover for the pig. Oh, Joseph says RBA playing it maybe. You know, maybe. And to me, you know, Andrew, it used to be primarily just Aussie jobs report. That because we already knew everything else back then. But really, to me, it seems to be any really big news event where if I'm trading the Aussie and it's an event-driven strategy, right? I tend to I like to hit my home run, walk around the bases, and then leave the field, aka take my profit and run. There's just something about the Aussie. It's just that's it. It'll go up 100 pips, down 100 pips, and then up 100 pips. And I don't want to get wiped out. Right? One and done. Yeah, oh, my pleasure. But it's also kind of fun, right? Like to announce that you're going to go upstairs, make a ton of money, and be back within a half an hour. So anyways, Canadian GDP, we'd like to know that the crash in the Canadian economy is over, especially if we're at a double top on the USD CAD daily chart, right? So a good number would be a breath of fresh air for Canada, especially if oil prices have stabilized, which maybe they have. Has anyone decided to corner the market on oil? That we've printed a floor on oil? Well, if you think we're getting there, if you think the market is bottom for copper and iron ore and coal and even steel, which iron ore and coal make, and gold and oil, then commodity currencies might be at their bottom too, right? And specifically like Aussie yen, CAD yen, Nokia yen, maybe. I mean, all these things might be interested. So remember, one of the things that I've asked you to do, and I don't know if you do it, of course, but what's your marketable idea? You had to set up a PowerPoint presentation. So obviously you're not talking about today or tomorrow, right? But if you had to design a PowerPoint presentation that would convince an investor to give you money, obviously you would have to have an idea. Obviously you'd have to have some strategy. You would have something you could sell. What would it be? What's your alpha, baby? How are you going to outsmart the market and make your trading be an irresistible investment to a wealthy person? And you say, well, I've done my analysis, and I think the big play here are commodity currencies, and that you believe over the next 6 to 12 and 18 months, the commodities are going to stabilize, and the world's going to find commodity currencies are going to be way undervalued. And that as the ECB starts to create green shoots from all that quantitative easing, that these other economies are going to start to expand again, and you're going to see, Chinese PMI manufacturing data well above 50, which is going to create demand for commodities, but we'll already see that impact through the currencies. So there, all of a sudden, you're like the smartest person in the world. You're like, yeah, commodities are down, but you've let them fall for a year or so to print the bottom, and now you're like, well, over the next 6 months, you foresee the bottom, and in 18 months, these things are going to be expensive again. Buy low, sell high. What's your alpha, baby? Right? So maybe you start looking at Aussie yen, CAD yen, Noki yen, Mexican peso yen, Brazilian Hei yen. Whatever. Commodities, baby. Where are we going to be in 18 months, not 18 days? Okay. All right. So blah, 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 blah. Governor Stevens. That's going to be interesting. Okay. And again, these, FOMC members, Fed members speaking, they're prepping everyone for the rate hike in December, right? Cool. Australian GDP could be interesting. Same thing. I don't think you're going to get a good number. There's nothing to say that the past was better than we think now. Okay, fine. ADP used to be useless. Then it was a really good scalp because it was highly correlated with non-farm payrolls. And now I think is less of a scalp. I think it's playable, but I don't think the market cares as much as before. And I think we're going to lose the correlation as time goes by. Okay. So I'm like, that might be interesting, but probably not. But how about Bank of Canada? Raising interest rates, cutting interest rates? Are they going to say anything? What can we learn? I'd keep my eyes wide open, okay? Especially if you had, some sort of surprise out of the GDP number, but I wouldn't expect that. But whatever. Any kind of interest rate decision, you should be there, right? You should be a central bank groupie. You're like, it's like Grateful Dead fans, right? You just follow the Grateful Dead from concert to concert to concert. Right? You should just be there. You're like, I don't expect anything to happen, but it's Grateful Dead, dude. Okay. Grandma Yellen speaking. Could be interesting. So just look, put this day together, right? Aussie GDP, ADP, another dumb prediction, right? The Bank of Canada, Janet Yellen speaking. Holy smokes, what a good day. It's going to be, don't forget it's Wednesday, right? So it's oil inventories day. Holy smokes, eh? I mean, just love it. What a great trading week we got going. Trade balance data, do you think that's important out of Australia? Yeah, in particular, you don't want a negative. This means Australia imports more than it exports. Every time I say that, I feel like I need to sit down, but the truth is I'm already sitting down, but I feel like I need to lay down on the floor. That's ridiculous. What is going on? Okay, that's bad. That's so bad. I mean, put it this way. Imagine the United States had a trade surplus. When was the last time the United States had a trade surplus? We were happily on the gold standard, I'm sure. Right? I mean, it's just like, that doesn't happen. It's not supposed to happen. Yeah, it's like dogs living with cats. You're like, that's gross. All right, ECB interest rate decision, obviously, Thursday is just a beauty. Press conference, awesome. Just like there's so much going on here, so much that could happen, so much that the ECB has the capability of doing, and so much potential for disappointment. So much disappointment could come out of this. Like we're ready. Like, all right, go ahead, Draghi. Cut interest rates. Add to quantitative easing. Add to to how long and how much. I mean, just hit it with us, baby. Tell us you're going to save us, right? And we'll find out he does nothing. Cut interest rates, right? Add to quantitative easing. Add to the timeline. Do it all. Do some of it. Don't be shocked. Like, we're ready. We'll take it. Do it all. We're happy. We're ready for it. So don't be shocked if nothing happens. I mean, and just be, the market is just like flabbergasted. But you know what? That's my old story, and I've been saying this for a while. Mario's been doing a good job. In most cases, I'd say Mario's doing a good job and has had to do things like change the law so that he could do what he needs to do. So, and I think he did some. And you remember how the politicians tried to fix the Greek scenario, and they talked and talked and talked for years, and then we get to the point where there's a vote, and then there's another vote, and then there's another vote, and then there's another vote. Nothing happening, right? And then all of a sudden we get it just done. So what broke the camel's back, the Greek camel's back? Mario Draghi did, not the politicians and the governments. He pulled the money. And within a weekend, you have Greek people going to the ATMs and there's no cash. Oh! You can't go to the bank and get money? Oh! All right, boom, vote's over, done. Next. So anyways, Mario's done a very good job. Trichet, in comparison, would just, hit on the girls. Hey, I am French. It is the way of the Frenchman. Right? So anyways, ECB interest rate decision, fantastic. ECB press conference, fantastic. There's so much that could happen. And even the disappointment could be tradable, right? And then you follow that up with ISM services. Awesome. I mean, great trading day on Thursday. Okay? Thursday is a fantastic trading day. And then Grandma Yellen speaking again. Good week, guys. Good week. So Friday is probably just a worthless day, right? Should we take Friday off and go golfing? More Aussie news. So look at guys, Aussie. Should you be trading Aussie this week? Wink, wink, nudge. You know what I mean? Should we be trading Aussie? Wink, wink, nudge, nudge. It's filled with Aussie news. Holy smokes, right? So anyways, so that's Friday, which to me is Thursday night. So, get a little scalp in there. And then, how about non-farm payrolls, CAD jobs report? Bada bang, bada boom, yeah. Boom, yeah. Can't say booyah. I think that's trademarked, right? So, yeah, amazing week, isn't it, guys? Just an absolute amazing week. So should we review where hedge funds have super large positions in the market? Yeah, okay, we'll do that. I mean, but what an amazing week, right? Like, there's just so much going on this week. It's ridiculous. It's a blessing. I mean, I'm excited. I can see almost every Asian session, every European session, and every US session being tradable this week. We don't always get that. Oh, Demeter's got a, no, I missed it. Sorry, Demeter. Got a lot going on, Bubba. Oh, how important is the annual health check? Biggest banks in the UK. Um, well, I'll tell you what. If they come out negative, that would be bad. But I don't think it's expected to, right, that anything terrible is going to happen of that. Well, again, if it's bad news, that would be unexpected, and that would be bad, right? But I don't think anyone's expecting that. I mean, they've had years to work on that, and things should be fine. Um, I don't think we have a banking crisis anymore, right? Oh no, no, it's a good point. How do you filter through all the noise, right, guys? I remember when like Japan and China were fighting over the little islands in the middle of the Pacific, right? And there's some warships and stuff out at sea, and the Americans wanted to get involved. I remember some guy in one of the webinars, he asked, um, should they freak out, right? Like basically, right? And I said, well, it gets a lot of press, and yes, it's not good for warships to be circling each other, But I said, unless missiles fly, it's not going to be important. And I'll tell you why. What is going to shake an institutional investor that has billions of dollars invested in long-term investments? What's going to get them out of those positions? Some rumors? Oh, Zartem, is it not updated? Shoot. I'll double check it. Okay. But yeah, I'm not even looking. I'm thinking as I talk here. What is going to shake an institutional investor that's made a 10 or 20 or 30-year investment worth billions of dollars? It's locked in. Stops are in place. They can't lose money. They've already know how much they're going to receive. Let's say it's a bond or something. They're going to get these payments, and they've already put it into their cash flow analysis into the future, and it's already in the business plans. And I mean, it's all done, right? What is going to get them out of that investment? Rumors? No, it's got to be pretty shocking stuff, right? So China and Japan, toe to toe in the middle of the Pacific, not good for business. Okay, all right, might get some speculators moving, but it's not going to get the institutional money to move. Missiles flying, war, oy vey. Bring the money home, baby. Bring the money home. Okay, but not until the end of the world kind of stuff. And it usually has to be a big, a big economy and all that kind of stuff. So like, you remember, Russia going into the Crimea, and we have this big war going on in the Ukraine. Didn't change a thing for most of the world. Changed a lot for the Ukrainians, right? But outside of Ukraine, the Ukraine. So, war in Syria hasn't changed a whole lot for most major currencies. But if it was Saudi Arabia, it'd be the end of the world as we know it, right? Because, oh my gosh, our oil. So seems to me in many cases it comes down to oil, not blood, right? Hey, Artem, I grew up in Canada. I was born and raised in Canada, and I grew up in a place called one, and half the population's Ukrainian, right? Hey, where are you going for Christmas? Baba and Guido's house. So, we're having pierogies. Yeah. So, and cabbage rolls. So, anyways, all right. So, November 16. Yeah, I guess that isn't updated, is it? Let me see if I can zoom in a little. Just seeing if I can kick in a data pool or something. So let me get this data here. So this should have been the 24th that we're looking at, right? And this, or the 23rd, and this is the 16th. And yeah, that's 16th of November. So it's not the right one. So I guess we'll just dive in and do some technical analysis then. Look, you can just tell this is YJ's. Oh no. Oh wait, March. Yeah, hang on. Yeah, the 16th of November. You can just tell this is YJ's post. Cool, man. Yeah, I like your posts, YJ. They're nice. And pretty. All right, so we'll do some technical analysis since our COT data hasn't been updated. Oh yeah, well Joseph, on this TradersWay doesn't have it, I don't think, right? So not much for me to cover, but let me double check that. Oops. Because if I don't have a chart, then it's sort of pointless, right? Did we add it? Oh, we did add it. All right, so let's talk peso then for a second. By the way, I've received several emails by a guru that's selling a Mexican peso trading system. Does anybody get that? Um, did anyone buy it? No? No, I'm serious. Well, look, I don't know. All right. So let me tell you one interesting thing that I have done in the past, um, and I'll teach it to you for free. Mexican remittance. I don't think I spelled that right. Come on, help me out. Remittance to Latin America. Wikipedia. Remittance. Let's see. Yahoo Finance. 2014. Wonder if Bloomberg will give it to me. All right, so this does something. So let's see if this gets us closer. All right, so July 2012. Wonder if we can do it here. Mexico remit. Is this it? All right, so what this is, this doesn't look like the right thing, but maybe it is 2 billion. All right, well, I'll just assume this is right. The website's changed a lot over the last couple of years, so it looks a little different. And of course, then we get an error. Let's try 5-year again. All right, so anyways, Mexican remittance, what this is money from the United States moving back to Mexico. Specifically, that's what that is. Okay? So it's money traveling back to Mexico. And why would money be flowing out of the United States back to Mexico? Migrant money to support the family. It's true. Mexico does send a lot of workers to the United States, and it is millions of people. And there's also, citizens and residents, permanent residents in the United States that are of Mexican descent that send a lot of money home to relatives. Okay? It's not Mexicans going home. It's Mexicans, let's say, lined up at Western Union. Pardon the cliches, and I don't mean anything by it. But at Western Union, wiring money home. Okay? And when do you think this tends to happen? Especially, let's say you're an illegal alien, and there are some Mexicans in the United States illegally that do find work. But because they're illegal, they don't have bank accounts and stuff, right? So, good time to wire and all that kind of stuff. It's not like they're going to Bank of America is what I'm saying, right? But anyways, yeah, actually, Rick, more current statistics are showing that there are more Mexicans leaving the United States than entering, which is an interesting social thing. Don't know what it means yet, but well, not necessarily. I guess maybe. Yeah, James you're a builder, right, James? If I remember correctly. So in that case, you would know. Yeah. Cool. So anyways, what simply has happened, what I noticed, how about this? What I noticed, what got me thinking about this, is I did study the Mexican peso for a while. So this was something I taught for several years, for free, of course. But I had noticed the peso tended to get strong at certain times. I thought, well, that's interesting. So I looked at back data, and not always, but quite often, at the same time, over and over and over again, the peso tended to get strong for a while. And I wondered what it was. And it was always sort of like the last couple of days of the month or the first couple of days of the month, just kind of in that area, sort of last week, first week kind of time period for at least a few days, but sometimes the whole month, but it depends on the fundamental trend behind it. But at least, even if the fundamental trend was weak going into that period, at least for a couple of days, there would be a bounce, that the Mexican peso would get strong for a few days, and then it would do whatever it was going to do anyways. So I wondered and I wondered and I pondered, and then it came, right? So this is Mexico, money going to Mexico from foreign countries from Mexicans. Okay, and then it turned out I'm like, yeah, Timothy has it there. It's the monthly paychecks. They're getting paid at the end of the month and sending money home. And I'm like, oh snap! That just makes sense. It's a trade based on human nature and human cycles. It's a human pattern, not necessarily a technical pattern, but it's certainly a fundamental pattern. People got paid at the beginning of the month, or let's say the last day of the month or the first day of the month, and then what they did was send money home. And you can see right now it's $2 billion a month, and it was way down. This is 1.6, and it got pretty low. But there was a time when it was even much higher. I wish we can get the 5-year, but they don't even really have it. But 5 years ago, I was trading this, and it was much higher. And so what I had found is in that period, a lot of that money. So right now, 2 billion, right? 2,000 thousands, right? 2 billion per month tended to happen at the end of the month, beginning of the month kind of period, when paychecks came out. And then I realized it was the ultimate currency trade, guys. I knew based on this pattern, so let me go back to a pattern. Let me show it to you. Okay, look at the pattern. It's about 2 billion, a little bit more, but since, this is April, May, June, July, August, September, October, it's more than 2 billion most of this period, right? More than 2 billion. It's a 2 billion. Oh, 2,000 thousands. Yeah, you're right. Not 2,000. 2,000. Yeah. Anyways, yes. 2 billion. It's 2 billion, right? That it's the ultimate currency trade where we know within a period of maybe 72 hours that somebody's going to buy $2 billion worth of Mexican peso. How would you like to know that in advance? So you remember, the currency traders in London that got in trouble because, one side of the bank would call the trading desk for the foreign exchange trade and say, hey, by the way, we're putting in a $2 billion order for this client, wink, wink, nudge, nudge. Maybe you want to get in 5 minutes before we place this trade, right? Remember how banks were front running their own clients and they got in trouble for this because it was like free money? Well, how would you like to know within a 72-hour period when a $2 billion trade is going to be placed? Well, now you do. And it's not quite, that's why I'm saying it's kind of the end of the month, kind of the beginning of the month. It depends when people do it. But a vast majority, from my observation of the Mexican peso, a vast majority of this 2 billion came in that kind of 1 week period. And the Mexican peso, not always, but often enough, tended to get strong, at least for that short period of time. And then just once that buying stopped, because remember, it's Mexicans actually going into the foreign exchange market and buying 2 billion US dollars worth of Mexican peso. It's not even 2 billion Mexican pesos. It's probably like 14 billion Mexican pesos. But they're in the market buying. What happens when they stop buying, when it's like the second week, when no one gets paid anymore? What happens to that demand? It dropped. What happens to the price? It'll do whatever it was doing before, right? But at least now we know where that demand comes in, and we know it tends to cycle based on human nature that we can understand. And if you understand it, then it's not like a weird trick. It's just a cycle, a logical cycle. All right. So anyway, so I started, going to like daily charts, for example, and looking at the Mexican peso at the beginning of the month and started to pay attention. So like I said, it's not always, you're not going to like set it and forget it kind of thing. But like, oops, I guess we can't quite get the beginning of the month. And there's a lot going on there now that is much more fundamentally driven than the short-term demand. But we've been stable, as you can see, most of the year. $2 billion tends to come into the market that time. All right, so this is sort of the last week here. All right, so this is the last week of last month. And you see how the Mexican peso got strong for until about the end of that week, right? This is a 3-day period. And if you started even a little farther back, right? Right, so again, it's not like quite, it's not, I wouldn't call it like free money, but it's something you should pay attention to, right? I wonder how October started. Okay, so let's go to the beginning of October to about the 5th of, here's the 6th, to the 7th, right? So there's 1 week. And remember, when this comes down, the Mexican peso is strong, right? Wonder what September was like. See, not always, but, not always, but it's something to pay attention to. So what happened this month? Let's say here's about a week's worth of trading. Nothing. All right, didn't work out that time. So on and so forth, right? July, August, here's the last week of July. Okay, not amazing, but something. And you start to look for these patterns, and they were pretty good at one point, right? So here's June, guys. Okay, June 3rd, could have been like a Monday, the first Monday of the month kind of thing. Here's the first week of the month. So I don't know. Okay. So it is interesting. The point, though, that I like, and again, this isn't something I just made up. It's not like I'm trying to sell you like, oh, some new trading strategy I came up with, give me $100 and I'll teach you. The interesting part of this is it's a logical process that I understand based on just really, truly human nature, where you're sending money back to your wife and kids or grandma and grandpa, mom and dad. It totally makes sense, and I understand it. And the other part that I like about it is that you can prepare for it and say, well, we're kind of getting close. It's the 30th of November, right? It's the 30th of November. Maybe I look for Mexican peso strength over the next few days. So what would I look for? Can you see on this USD Mexican peso 4-hour chart that I've already identified previous support that's been broken? WWD. What would Wayne do? What's the process, guys? Okay. Maybe the pattern that you're looking for looks like this. Is it any different than what you would normally do on any other pair or in any different situation? That looks totally normal. Is the setup reasonable wise? Yeah. Roll reversals, 50% retracements. But doesn't it give you one ounce more of confidence to think that $2 billion is going to come in the market and buy Mexican peso? Do you think that would help your USD Mexican peso short? to think that you're front running a $2 billion trade? Oh, snap. So if you were hanging with me 6 years ago, isn't that neat? So it's not anything new at all, but I think it's pretty cool. And I just noticed it just from asking questions, thinking about it, and doing some research. And that's why, my advice to you is to fall in love with Forex so that you just like get fascinated by like what does that? Yeah. So anyways, it's been real. Tomorrow, lots of technical analysis to do. I hope you'll be here. I will upload the video to YouTube and to Forex.Today. Will you share it on social media? I don't think I asked you to do that, right? I don't think I've ever asked you to do that. Will you share it on Facebook? Be cool. Maybe it's important. I don't know. It'd be interesting if it was. If suddenly, YouTube found that exciting somehow. Yeah, it'd be nice if you did that. So, anyways, there's my blood, sweat, and tears for years. One little piece of that, in a bloody mess. How to trade the Mexican peso. And I hope you enjoyed my Mexican peso trading strategy for free. And I do that because you're here every day and you're a loyal member of our community, and I thank you for that. Maybe one day you'll fund a live trading account at TradersWay, and the world will be a beautiful place. So peace on earth, may the pips be with you, may your profits be above average, and I'll see you again tomorrow. We're going to have a great week, guys. Cheers.